5 exit strategies from the market that we offered to our users. So we are constantly working on the further implementation of various instruments like stop loss, take profit, and many other that allow you automatically to secure your trading and to boost your trading performance. So we will also talk about what is the main difference between the narrow grid spacing and wide grid spacing. So for those of you who don't know what the grid spacing is all about and what are the grid levels and what is the grid mechanism, don't worry, I will explain this to you in 2 minutes. So stay with me. And other topics that we will cover today include risk-free demo trading to discover and to develop your own trading strategies. So that's basically a trading simulation using your virtual money. So this allows you to experiment with various trading styles, with various trading setups, configurations, absolutely risk-free. So that's the cool thing about Bitsgap, is that we have this thing fully optimized, demo trading mode. We will also discuss what is the backtesting is all about and how to use it to find optimal cryptocurrencies to trade and to diversify your portfolio, or how to use it to diversify your trading strategies. We will talk about profit maximization, especially on the sideways and on the rising market. So these are 2 main market trends on which automation allows significantly boosting your trading performance. And most importantly, on the falling market, there is a loss minimization built-in mechanism in the algorithm, which allows you to minimize your losses in case if the market starts to fall. So the power of artificial intelligence. So we are taking advantage of this technology, and it allows us to have a fully configured trading algorithm. And here it is. So it is called grid mechanism, the one that we are using and implementing and developing. The basic idea is that the algorithm places both sell orders. So here on the chart they are represented by, let me use the laser pointer. So they are represented by the red lines. So these are also known as grid levels, and in order for the algorithm to plot all of these sell orders, you must have on your balance enough of the base currency. So in this case you see that's the Cardano trading to USDT. So in this case, in order to sell something, you must possess it, right? So that is why it takes the base currency to plot and to place all of these sell orders. And simultaneously, the algorithm also places buy limit orders. So they are represented by all of these green lines. So these are also grid levels, because the mechanism is called grid mechanism. So that's why all of the limit orders, they are grid levels. And the spacing, the space between them, the distance between the orders, between the limit orders, is known as grid spacing. So you see that in order to plot all of these buy limit orders, you must have enough of the quote currency in this case, so that the algorithm takes the quote currency to buy the base currency. So that happens on a rolling basis, and you see that the trading range is defined by the upper limit price here, which you can adjust in any direction you want. So you can make your sell zone wider or you can make it narrow. Same applies to the buy zone, where you see that the lower limit price is also adjustable, so you can move it upwards, downwards. Well, I will show you some examples when we will move to the platform. As of now, just stay with me. You see, the power of AI is that it also allows a high frequency execution of of orders. So that's the feature that allows to take from the market consistent profit inflow regardless of the market direction. So here on the chart you see this is lend coin trading to BTC, and it's been trading for already 34 days. So at the time when I made this screenshot, it's been 34 days since its launch. And you see that during this period, like almost more than 1 month, the bot has managed to execute 7,099 trades. All right, so that's what I call the consistency, 24/7, fully automated, and it doesn't require you to stay in front of the monitor hours. All right, so the algorithm just does its job, you know, and this is what I call the consistency. And if you calculate, that's actually 202 trades per day. So the question is, can you manually keep up with this pace? So can you beat this algorithm by making more than 202 trades per day without any rest, fully concentrated, emotionless? I doubt so. So that's the power of artificial intelligence, the power of automated trading. And yeah, the third advantage is the one that I already mentioned, is a consistent profit inflow. So let me show you. That's the example of Ion trading to USDT. You see the total investment of 600 USDT, and in this algorithm I have 47 grid levels. So even though on the chart you see only, I think that's 9 limit orders, in reality that's 47. But just to make it simple, visually I just plotted only 9 grid levels. So bear in mind that there are actually 47. So what I call consistency here is that each time the market swings, the algorithm manages to find those opportunities to buy low and sell high, you see, and add it up all together. You see, each time it sells, it takes the profit from the market and add it up together, result in decent profits. So if to calculate on a monthly return or annualized, so if annualized these numbers, well, from in my experience and based on those active bots that I currently have on my account, my average annual return is around 240%, and I will show you these active bots. So the fourth advantage is that automation. So bots, they are basically emotionless, all right? So they are not biased, and they don't know what is the behavioral finance is all about. So they just stick to the plan. They execute the trades accordingly to the plan, and nothing makes them to hesitate about the certain trades. So regardless of the market direction, the bot finds those opportunities on the market to buy low, so that eventually, consequently, it sells at a higher price. So even if the market is falling, the bot makes profits for you. So they are fully automated, already mentioned. And once again, for those who don't know what is the grid mechanism is all about, just a quick refresh and this short simple guide on what is the logic behind it. Basically, you see you have sell limit orders and buy limit orders, and as soon as the price triggers the buy limit order, so that means that the bot will take the quote currency, in this case that's the Ethereum, to buy the base currency, Binance coin. And as soon as it buys, as it executes the buy limit order, it places new sell limit order. So the base currency that you just bought over here, you must sell it, all right? So that is why the system plots a sell limit order. As soon as the price triggers the sell limit order, in this case the algorithm sells the base currency, it takes the profit in Ethereum and takes a portion of this profit to place a new buy limit order. So that creates an almost endless trading algorithm. So that's the logic of grid trading. Very simple and yet very efficient. And most importantly, what we have at Bitsgap is that all of the strategies, all of the cryptocurrencies can be backtested. So that basically means that you can always check based on the historical price what would be the profit if you would have launched the bot back at some point of time back in the past. So you can calculate what would be the bot profit, what would be the return that the bot would make for you during the period of 30 days, 3 days, it can be a period of 1 week. So all of the cryptocurrencies, they can be back tested. So you see, these are 4 examples. The first one is basic attention token trading to USDT. So during the period of 30 days, it has managed to make 15.7% in the quote currency. That's the USDT. So for BitTorrent trading to BNB, in this case, the profit is estimated in BNB. So that's the logical, right? The profit that you generate using Bitsgap automated trading bots is in the quote currency, all right? And one important thing for you to know is that you are the only one who has a full control over your funds. So with the API, which is known as Application Programming Interface, you basically enable Bitsgap just to execute trades on your behalf. And that's it, all right? Nobody else has control over your funds. So you are the only one who can withdraw funds, deposit funds on your exchange account. So at Bitsgap, we just have this ability using API to execute trades on your behalf because of the permission you've granted. So I will show you a quick guideline. So you basically at the exchange, you need the API key, the secret key. So those keys you can get only from your account on the exchange. When you go to API management, you create the secret key. And when you create the secret key, well, first of all, you have to verify yourself. You see, that's the security, and only you know how to access and create the API key. So when you create the API key, you see that you only enable reading and enable trading. You don't enable withdrawals and you don't enable margin trades, you don't enable futures. So you have a full control over your funds and you just let Bitsgap to execute trades on your behalf based on the configuration that you launched in the bot or in the smart trade that we have. So as simple as that. Now is the time to open the Bitscape page to launch our first bot in the advanced mode. So before that, a quick reminder that we are taking part as a Bitscape team in the OKEX tournament. So that's the 150,000 USDT total prize. So in the blog you will find more information about this competition, and you will find information on how to join the team, because together we have more chances to actually get the first place and to share the prize pool. So we already have Bitscape registered with 32 members in the team. So join now. Together, the more members we have, the more chances we have to take the first place. Now let's move on, and here comes the bots page. So when you go to Bitscape main page, you just log in and then you click on bots, and I will start with the demo mode, because in the demo mode I have more active bots. Currently this is my real account. So on the right side you see there is an avatar picture, and you can switch the demo mode on. So that's the virtual trading simulation I've been talking about. Here you have virtual money, which you can trade with, absolutely risk-free. And you see I have a bunch of active bots right now. Most of them, they are in the profit zone. Only 2 of them are in the negative area. So on the right side you see a configuration panel. That's the simple mode and the advanced. So the only difference between the advanced and simple is that in the advanced you have 3 instruments to consider in configurations. That's the take profit, and we will talk about the take profit in 10 minutes. The stop loss, we will also discuss what the stop loss is all about, and the trading up feature. That's basically one of the most interesting ones. So I have some slides related to this trading up feature, so stay with me. We will cover all of these instruments and how you can use them to to boost your trading performance and secure your trading. So you see you can here select the strategy, and right now we have 2 strategies. That's the SBot, which offers the highest frequency trading algorithm. So if you click on it, you see that the maximum amount of grid levels, so that's the amount of limit orders that can be placed within the defined trading range, can be up to 180 levels. So that's what I call a narrow setup. That's what I call a high frequency trading. And the minimum is 10 trades. So you see if I click on 10, you see now a completely different setup. And the more grid levels you select, the narrow your grid spacing is. So that's because you are basically plotting more grid levels within the defined trading range. So logically, of course, the more you place grid levels, the more narrow your trading setup becomes. And there are both some advantages and disadvantages when it comes to narrow grid spacing and wide grid spacing, and that we will also discuss in 15 minutes, so stay with me. As of now, you see here you can select the exchange that you enable to trade using the API system. And you see in the demo mode I have most of the exchanges already linked, so I can switch to Bitfinex or Exmo, but as of now let's stick to the Binance because I prefer the Binance exchange, and because it provides more liquidity. It's like one of the most liquid exchanges currently in the cryptocurrency market, so we will stay loyal to Binance during this webcast. You see here you can select the cryptocurrency pair, so you can type in it manually or you can search in the list. The cool thing is that below there is a panel which is known as recommended strategies. So these are all of the cryptocurrency pairs that, based on a monthly backtest result, they offer the highest return. So you see that Suscoin trading to BTC 129%. So that's the bot profit that the algorithm managed to generate during the last month. All right, and you can actually switch to weekly basis. So now you see you have a newly fresh list of recommended strategies, and it starts with band trading to BTC. And if you click to 3 days, then of course you will get a new one. So that's, you see the top one in this case, that's Rune trading to BTC. So it's up to you based on which period you prefer to choose cryptocurrencies. So these are the top performers. So that means that these are the coins that based on the historic results can offer you some decent returns. It doesn't mean that past results they guarantee that in the future you will get the same result. No, that never works like that. It's just that you can take this statistical data into account when looking for cryptocurrencies to trade. All right, so let's move on. And regarding the trading range, which is defined by the upper limit price and the lower limit price, using the chart, which you can zoom out and of course you can zoom in the chart, you can drag the upper limit price, and let's say I want to have a narrow sell zone, so I will drag the upper limit price below, and here it is. And now my upper limit price is at the price of 0.026. And if I drag the lower limit price, I can drag it lower or higher. You see that the lower price eventually changes. Or you can do this manually, but from the practical perspective it takes more time, so you'd rather stick to the manual adjustment on the chart rather than typing the lower price and upper price, because it really takes time. You can make mistakes. So, and as we know, in trading and investment, time is money, so you don't want to waste your time, and that is why using the chart it makes more sense. So as of the grid levels, you see I have now 180 grid levels, so that's why my grid spacing is reduced down to 0.55. If I make my trading range even more narrow, let me just drag the line. So you see the grid spacing, it has reduced down to 0.41, and if I even make my buy zone narrow, you see now it has been reduced down to 0.24. So the narrow is your grid spacing, the more opportunities for the algorithm you provide to seize almost every market swing. All right, because logically there are more chances that the market price will hit the limit order, which is only which is by only 0.24% distant from another limit order, whereas if you have a distance, let's say up to 10% of the grid spacing, so that means that the market should move like either 10% up or down to trigger the limit order. And that's not always the case, because depending on the volatility, it can be that the cryptocurrency you've selected is not that volatile, so it will never trigger this limit order because it stays too far. Whereas when you have a narrow setup, it makes more possible that the price will eventually hit the line and it will trigger the limit order. So as simple as that. Regarding the investment, here you can select and you can type the allocation amount. So let's say I want to invest 500 USDT, but first of all you have to make sure that you have that amount on your balance. So when you click on balance, see right now I have over 6,000 already in trades. So this is a frozen amount. I cannot use it because these are the money allocated to all of these active bots now. And I have only 2,000 available, and it turns out that I don't have right now 500 USDT on my balance. I have only BTC, which has the total value of 700. So let's in this case choose something trading to BTC, and let's let it be band trading to BTC based on the recommended strategies. And now let's reduce the allocation to 0.03. So you see that it is already estimated that that corresponds to 355 USD, and most importantly, you can clearly see the allocation. The base currency allocation, which is approximately 13 band coins, and in the quote, that's 0.02 BTC. So if I make my sell zone narrow, so I will drag the line below, you see the base currency required reduced down to 9 band in this case. So in order to initiate this bot, I must possess 9 band coin so that the algorithm would be able to place all of these sell limit orders. All right. So, the same logic applies to the quote currency. If I make my buy zone narrow, then in this case less of the quote currency will be required. You see it was reduced down to 0.018 BTC, and that's how you can easily manipulate the allocation based on your preferences. It turns out that in order to launch this bot, the system is telling me that I don't have enough. So to have 180 grid levels with this trading range, that amount of investment is not enough. So the system is telling me that you must have at least 0.5 BTC. Let's assume that you don't have that amount, and for some reason, by the way, it should have this button which is known as adjust by grid quantity, but for some reason right now it's not working, where well actually it should be. And maybe we can, let's use another trading pair just to make sure that this works this time. So now let's plot again 0.2. No, that's actually 180. Yeah, you see? Now you see this button which is known as adjust grid quantity. So it turns out that this amount is not enough to launch the board with this configuration having 180 grid levels. So in this case, you can either find more investments or you can adjust by the grid quantity. So the system will automatically reduce, and you see it has reduced it down to to 77 grid levels in total, whereas before we had 180. But for some reason it says that you cannot place 77 grids into the price range. Okay, so let's now make some manipulations with the price range. Let's make my sell side wider. Yeah, I'm having some tiny problems with the platform. It's lagging for some reason. So I think I should refresh the page and try once again. So the logic is simple. When you see that allocation is not enough to launch the board with the amount of grid levels you've selected, then you can adjust the grid quantity. So the system will reduce the amount of grid levels, and in this case, it will be possible to launch the configuration with your preferred investment allocation. So that's as simple as that. Now let's just wait for the page to refresh. And let's try on this cryptocurrency pair that's anchor trading to BTC. And this time let's try with, let's say, 50 grid levels. Let's use parallel trading to BTC because I don't have active bot on parallel cryptocurrency. Let's make only, let's say, 40 grid levels with a total allocation of, yeah, once again, 40 grid levels with a total allocation of 0. Let's say 3. Yeah, so this time it's possible to launch the bot with this configuration. So as I click on start the bot, the system will notify me that in order to launch this bot, I must have enough of the base currency on my account. So in this case, as I'm trading parallel to BTC, I must have parallel on my balance. So if you don't have it on your balance, the system will notify you to buy it using the market order. So yes, I will click on yes buy, and it will initiate the market buy order, and you see it has successfully filled this market buy order, and now I can see the bot in the list of my active bots. So that's parallel trading to BTC, 40 grid levels, total investment 0.03 BTC, and if I click on view, I can find more information about all of the current open orders, the allocation amount and the price at which it will sell and buy. So now let's move on and talk about what makes it so interesting about the investment change and the bot profit. So what makes them different and what unites them. So these are basically two key metrics for Bitsgap users to understand in order to track the trading performance. So notice that here you see you have an investment change column and the bot profit. So the bot profit stands for the net profit generated by the bot in the quote currency regardless of the market direction. So if you, let's say I will select my ADA trading to USDT, so on a chart you will see all of the green and red circles. So these are the points at which the bot managed to sell and buy, which allowed the algorithm to generate profits in the quote currency. Whereas investment change, it takes into account the bot profit, but it also takes into account the value change of the base currency as the market is constantly fluctuating. All right, so if the base currency is appreciating, like here on the chart you see it is appreciating, so your investment change will be positively affected. Whereas if the market is falling, like in case of ERD trading to USDT, you see that on a larger scale the market is now falling. So that is why my investment change is significantly affected by the value change, as the value of ERD is depreciating on this falling market. So that is why, to fully grasp the logic of what stands for the investment change, simply when you see in this example that's BitTorrent trading to USDT with the total investment of 400 USDT, and you see that investment change is up by 12%. So simply, if you multiply your allocated investment, so that stands for your initial investment, and you multiply it by the investment change, you will get your current investment value. All right, and to calculate the net profit, simply you take the current investment value, which derives from this first calculation, and you subtract the initial investment value, and that's your pure profit. That's 48.9 USDT, which you will get if you click on close the bot. All right, the second method to calculate your current investment change is simply by clicking on the view button that's over here. You see you have open orders. So some of the base currency is allocated currently to sell limit orders over here, and the quote currency in this case is allocated to buy limit orders. So if you calculate, if you sum it up together, that's your current investment value. All right, as simple as that. So it's exactly the same, and net profit is exactly the same. So that's 48.91 USDT. So once again, investment change, it takes into account the bot profit, all right, and also takes into account the value change of the base currency. So if the market is moving upwards, in this case, you are positively affected. So you can see that your investment change is higher than the bot profit, even though the bot profit is already priced in the investment change. Whereas if the market is falling, then you are affected by the negative value change as the value of your base currency is depreciating. So now is the time to discuss what are the optimal scenarios to launch the bot. So like these are mainly the rising market, of course, because we are making money when the market is rising. And also it turns out that on the sideways market, automation significantly outperforms ordinary simple hodling strategy. And by hodl strategy, I mean just buying the cryptocurrency asset and it just lies in your portfolio and you nothing about it. And so you're just waiting for the price to appreciate in the future, hopefully. So that's what I call the hodl strategy. Whereas with automation, you can significantly outperform hodl strategy, and I will show you how exactly. So this is an example of a rising market, and right now we are actually in the rising market. You see Bitcoin is rising, BNB is rising, Ethereum is rising by, I think that's around 60% during the last week. So yeah, definitely on the rising market right now. So the logic of the bot is that on the rising market, it keeps buying low and sell high because, as I mentioned, regardless of the market direction, price swings happen. So that's why the bot can find those opportunities on the market to buy low and sell high. So you see it's moving upwards, it bounces off the support level, it then reverts from the resistance. So it's kind of moving upwards globally, but on a smaller perspective, you always see these price swings. And that is why the bot manages to find those opportunities to buy low and sell high. And on the rising market, you will get this consistent profit inflow as the bot keeps accumulating profits for you. And also here you are affected by the, as I mentioned, positive value change of BNB. You see, because the BNB is rising to Ethereum, and that's why your investment change is also positively affected. So that's what I call an active investment change, because here you get not only the bot profit but the value change as it is positively affecting your investment change, boosts your trading performance. And my favorite example is the sideways market. So it turns out that automation brings higher returns on the sideways market, and it allows you to earn during the stagnation. So simply you let the bot to use your base currency, in this case that's BNB, to generate profits for you during this period of stagnation in Ethereum. All right, because what is the sideways market? It basically the period of stagnation when the price stays somewhere in the neutral zone. So yes, it is moving upwards and downwards, but on average you see it is in the neutral zone. So if you would hodl BNB during this sideways market, you will basically have a zero investment change. Whereas with automation, I will just now in the next slide show you the exact example how automation outperforms the simple hodl strategy. So stay with me. You see here the arrow, it points to the price at which you imagine you just bought BNB. Sorry, that's Bitcoin Cash trading to USD. So at that price you bought Bitcoin Cash, and now you started to wait for the price to appreciate. So, and up to current price, if you would simply hodl from that point up to current price, you would be only in the profit zone by 5%. All right. Whereas with automation, you would have 14% total investment return. All right. Because from that point up to current price, you let the bot, when you are using automation, you let the bot to make profits on all of these market swings. All right. So that is how you allow the algorithm to maximize your returns, and that's almost a triple effect. All right. So now let's discuss what makes it so. I mean, what is the main difference between the narrow grid spacing and wide grid spacing, and what are the advantages and disadvantages of both configurations? So just to make it clear, that's the narrow setup, that's 0.33% of the grid spacing. So that's what we call narrow setup. Whereas this one is a wide setup, where you have grid spacing, well, in this case that's 3.12%. So what makes it different? So let's start with the example. You see your trading range is defined by the upper limit price and lower limit price. So you have buy orders placed and sell orders placed. So let's assume that you have a trading setup with only 2 grid levels. So that's your buy order and that's your sell order. In other words, your sell order is nothing more than just a take profit, because when you buy something and eventually you sell it, that's your take profit. As simple as that. And in this example, let's assume that the grid space is 5%. Now you see the market starts to fall. It eventually triggers the buy order. So now we are in the market. The price has triggered the buy limit order, and now we are waiting for the price to hit the take profit. But it turns out that it didn't make it up to the take profit zone. So the base currency that the algorithm bought here, we just got stuck with this base currency on our balance, and we are not making profit. And that's just because we had such a wide setup that the volatility of this cryptocurrency was not enough to hit the take profit zone. All right, it almost hit the take profit, but it didn't. So when you have a narrow setup, so these are your buy and sell limit orders, you say, let's say it's 0.3%. You see the market in this case will most likely hit, if not all, but the majority of all of these grid levels. So that means that deciding whether to stick to a wide setup, because when you decide to have a wider grid space, that means that your return would be higher, because that's the marginal potential that you configure to the bot. And by that, you significantly reduce the chances that the price will eventually hit all of the limit orders that the algorithm will place based on this grid spacing. All right. So that's kind of, you have to decide if you are willing to achieve the highest return, then you must keep in mind that most likely the price won't trigger your take profit zones, all right, because of the wide setup. Whereas when you have a narrow setup, you have significantly more chances that the market will eventually hit, once again, if not all, but the majority of all of these orders, and added up together, all of these small profits generated, they add up together to a decent return in any case. All right, so you have to consider those cryptocurrencies, and you have to consider either a wider or a narrow setup based on the cryptocurrency volatility. So if you see that the cryptocurrency, let's say that's once again it's lagging for some reason, let's refresh the page. So if you see that the cryptocurrency has this low volatility, so it's like moving only 5% up and 5% down, and you have a trading setup where you have grid spacing up to 7%, so most likely the algorithm won't be able to trigger all of these limit orders, so you won't generate profits from the market consistently. Whereas when you have a narrow setup on a cryptocurrency that has a 5% volatility, standard deviation up and standard deviation down 5%, moving from its mean, then most likely most of the limit orders will be triggered, and all of these proportionate small profits generated, they will add up to a decent return in total. All right, so you see I have some examples where I have only 37 trades in total during the 20-day period, and that's the result. All right, whereas I have some examples where I have 708 trades in total. So here I have grid spacing 0.13. That's probably the lowest that I have here. And if I click on this one, you see that my grid spacing is 3.38%. So here I'm risking that the market won't hit all of the limit orders placed on the chart, whereas here with a narrow setup, like more than 90% of my grid levels, they will be triggered by the market in any case, generating all of these consistent small profits. So that's the idea. Now let's move on and discuss what are the instruments that significantly can boost your trading results and, most importantly, secure your profits. So I've already mentioned the trading up instrument, and it's over here, you see, which you can switch on and switch off. So the idea of the trading up is that you have a trading range defined by the upper limit and lower limit price, and when the price starts moving upwards, and you see here it establishes a new higher high, so we are now trading higher than the trading setup that we had over here. So when you have your trailing up feature on, sorry, the instrument on, like this, you see it's on. So the trading range, which is defined once again by the upper limit and lower limit price, it will follow the market. So if the price moves upwards again and establishes new higher high, then the trading range will be adjusted accordingly. So now you see it's over here. But if the price then breaches the lower limit price and the market starts trading below the trading range, there won't be any trades executed by the algorithm here, because the bot executes trades only within the trading range. But if the price eventually returns back to the trading range, so here the algorithm will continue trading, so it will continue generating profits. If it then eventually moves upwards again, it will establish a new trading range. So that's the logic of the trading up, and that is why it is called trading up, because it only follows the rising market. It never follows the falling market. All right, so this configuration ensures that you stay in the market 24/7 and you let the algorithm to follow the price, to follow the rising market to generate consistent profit inflow for you. So that's the example of NG trading to BTC, where I have my trailing up feature on. So that was my real example. So all of the examples that you see here during the webinar, they are all real. They are from my real account. So no magic, that's just automated trading. You see, initially my trading range was defined by this upper and lower limit price, and eventually you see that the price has managed to breach the upper limit price, and as I have my trading up feature on, the trading range successfully followed the price appreciation. So now my trading range is over here. You see, I have the sell side zone and buy side zone, and you see what was the boost from that point up to that point. And all of these circles that you see on the chart, these are the trades that the bot managed to execute as the market was rising. Whereas if you have a configuration without a trading up feature on, you risk to skip the upside momentum. So here you see I was right that the market started to move upwards, but as I didn't have my trading up feature on, as soon as the price breached the upper limit price, so it breached my trading range, you see it is now trading over here. The bot didn't make any trades here. So the trading range got stuck in this area. So if I had my trading up feature on, the bot would have managed to execute trades on this price momentum over here. So my profit would be significantly higher comparing with the one that you see here. So it's up to you to decide whether or not to switch the trading up feature, because depending on your experience, it can be that you prefer manual trading, and also you prefer diversifying your trading strategy with automation. So you prefer in this case to trade without the trading up feature because you'd rather close the bot and then eventually launch it again at a better price. All right, so when you see that the market is overbought, it is trading, let's say, over here, and you anticipate that from that point the price will eventually fall down, then you'd rather close the bot over here at the highest price to then eventually launch it again at the lower price. So by that you avoid this short-term market fall. So that in this case makes sense to not take advantage of the trading up feature if you prefer manual trading over automation, or if you prefer automation as a instrument of diversification of your trading strategies. But for the majority of traders, regardless of your experience, using automation makes sense because it significantly saves your time, and the bot will generate profits for you regardless of the market trend. So when you have your trading up feature on and you anticipate that the value of the base currency, in this case that's Cardano, will appreciate in the long term, so having your trading up instrument on, you enable the algorithm to follow the price appreciation, and that's how you let the bot to generate consistent profits for you 24/7. Let's move on, and now is the time to discuss how the bot profit offsets the negative value change of your investment. So here's the example. Imagine that you buy the base currency at that point, so that's quantum trading to USDT at that price, and then you hodl it down to current price. So in this case, without automation, you would bear a 6.88% loss, all right? Whereas with automation, your loss would be only minus 3.18%. So you see that during this market fall, the bot has managed to accumulate profits for you, and this profit is used to offset the negative value change of your falling base currency. All right. So instead of having a minus 6.88% of loss, you only have minus 3%, and that's thanks to the algorithm, thanks to the automation. That's what we call a loss minimization on the falling market. So as you now learned key instruments to boost and secure your trading, now is the time to discuss what are the sources of trade ideas that we at Bitsgap developed for you. So first of all, the one that I already demonstrated is recommended strategies based on the backtest results. So based on the past month performance, you can select those cryptocurrencies that offer the highest return, and you can project, or you can estimate that these cryptocurrencies can offer pretty much the same, if not the same, but close to, well, returns, and you can select these cryptocurrencies to trade with. And the backtesting, in this case, backtesting, the one that is used in defining the recommended strategies, and the backtesting, which stands for this one, if you click on show backtesting results, so that's basically validating the strategy using the historical price. So let me show you the example. It takes into account the volatility, risk, and value change, as well as the pot profit. So this is the example of NG coin trading to Bitcoin, and I decided to backtest the algorithm, taking the period of from the 11th of April to 11th of May. So that's exactly 30 days. And if I would have launched the bot back at that time, the bot would have managed to generate 34%. All right. So that's the result of the backtest. It literally simulates trading based on the historical prices. And you see that from that point, that's 11th of April, the upside momentum up to this higher high was 66% for NG. All right. So that's the market growth potential for that selected period. Whereas the risk in this case, from the higher high down to the lowest price during that period, so that was minus 34%. So that's the risk. All right. And another example is BNB trading to BUSD, same period, but you see that the bot profit is significantly lower. That's only plus 13%. The upside potential was 35 from that point up to highest high, and the risk was 23%. So if you take these cryptocurrencies and compare them, you will find out that using backtesting, you can actually find those cryptocurrencies that, based on your trading strategy, based on your risk appetite, offer optimal returns and risk for you. So it turns out that even though NG demonstrated the highest return, so that's almost a triple effect, and actually that's by 21% higher return in the bot profit, even despite that, the risk was higher, so that's by 11%. If you would have chosen NG, you would have taken a higher risk in this case, a risk that your base currency will depreciate by that amount. All right. So it can be that if you are quite conservative and you are risk averse, then your choice would be BNB trading to BUSD, because even though it offers only a 13% of return in comparison with the NG coin, this still remains quite a decent return on a monthly basis, and you take only a 23.4% of the risk. But if you are a risk taker and you are quite aggressive when it comes to trading, it means that you are willing to take a higher risk, and for taking a higher risk, you get a potentially higher return. So in this case, your choice would be NG. So that's why using backtesting, you can find those cryptocurrencies that comply with your trading style. And here on the main page, all you have to do is to select the cryptocurrency pair of your interest, and let's say that's Cardano to USDT you are considering to trade. So you click on show backtesting results, and here you can select the date range, and that's automatically set as a 30-day period. So from the 7th of July until today, the bot would generate 9% in the quote currency. All right. So you see all of the completed orders that it would have completed if you've launched it, and all of the open orders, because it is on a rolling basis. So it's an endless process of backtesting. That's why you see open orders here. So it backtests the strategy on a rolling basis. So remember, 9% for Cardano. Now if we select another cryptocurrency, let's say I'm interested in Ethereum trading to USDT. I click on backtest, and you see in this case the result is 22%. So that's certainly higher than the one Cardano offers. So you might consider trading Ethereum rather than trading Cardano in this case, because it has managed to accumulate a higher return, and it looks like a very strong rising market. Whereas if you remember the chart of Cardano, it had higher volatility. So comparing in this case Ethereum with Cardano, it turns out that Ethereum is the optimal choice. So that's how you can use backtest instrument to find optimal cryptocurrencies to trade. Let's now continue. And even though they have all of these instruments which you can manually select, like stop loss, trading up, take profit, we have this built-in security mechanism in the algorithm which allows us to fully automatically avoid almost all of the extreme pumps and dumps on the market. So on the left side you see what would be the performance without the optimization that we offer at Bitsgap. So simply your buy limit orders would be executed at the highest price because of this pump scenario that happened on GRC trading to Ethereum. So you see, that's the opposite logic that the algorithm should follow. The algorithm should buy low and sell high, but here you can see that it buys high, which is not beneficial, all right, because eventually the price comes back to its initial price, so it reverts back. Whereas here you got stuck with all of your buy limit orders, so you bought the base currency at a bad price, at the highest price possible. So that means that you are now taking a huge loss. Whereas with the optimization that we have developed at Bitsgap, most likely the algorithm, it's not 100% guaranteed, all right, but we are keep working on this algorithm to make sure that almost in all cases the algorithm will be able to avoid these extreme pump scenarios. But here you see that it has managed to avoid this pump, and that's how you get this profit consistency. And that's the algorithm that we are constantly working on to provide users with stable, consistent returns, so you wouldn't get stuck like in this example with your buy limit orders at the highest price. Nobody wants to buy high, everybody wants to buy low, and that's what we are working on here. We are working on the algorithm so that you would get a consistent profit inflow, and the algorithm will always buy low and sell high. So now let's come back to the main page and discuss some other features like the stop loss. That's the simple one, and you're all familiar with the stop loss. It's all about having this order that in case if the market starts drastically falling, so here you see the stop loss is over here, which I can also adjust manually on a chart. If the market starts falling, and I will use the brush to draw the projected movement. So imagine the market starts falling, it breaches the lower limit price, so it breaches the trading range, and eventually it hits the stop loss over here. So as soon as it hits the stop loss, the bot will automatically sell all of the base currency allocated to the bot. All right, so that's the full exit from the market, because what can happen next is that the price will start falling even further. So if you don't have the stop loss in this case, you would bear a higher loss, whereas having stop loss in the strategy, you have a control over the risk. All right, so below that price it is not possible that you will fall. All right, and with features like take profit, you can set preferred return. So let's say I want to exit the market as soon as the bot reaches the 10% of the investment change. So the take profit relates only to the investment change, not to the bot profit, but only to the investment change. So here you see that my Cardano trading to USDT is about to reach 10% of the investment change. So as soon as it reaches the 10%, the bot will automatically close the bot. I mean, it will cancel it out, so it will basically sell all of the base currency at the current market price, and you will be out of the market. And let's say I want to have a 7%. So as soon as the investment change hits the 7% benchmark, then the bot will automatically cancel out. And regarding those other exit strategies that we offer at Bitsgap, when you click on close, and let's use the ERD trading to USDT, you will find that there are 3 options to close the bot. The first one is the simple one that simply cancels out all of the open orders. So if you click on view, you see it currently has 50 open orders. So these are all of the limit orders currently open. And when you select the first exit option, it will automatically close all of these 50 open orders, and the bot will be moved to history. But what you have to take into account that you will have some of the base currency left on your balance. So even though you closed the bot, you didn't sell the base currency in this case. So it's just that something you have to keep in mind in case if you don't want to be affected by the value change of the ERD any longer. So you'd rather maybe close the bot by another option, which is sell at the market price, by which you sell all of the base currency. So you see that's exactly 42,000. So as soon as you click on it, the bot will sell all of the base currency. So that's going to be your 100% exit from the market. You won't have any base currency left in your portfolio in this case. And the third option, which only applies if you are currently in the negative investment change zone, that's the option of placing a sell limit order at a break-even price. So what you have to understand here is what break-even price stands for, and it stands for the price at which selling all of the base currency, your investment change, will be 0%. So if you don't want to close the bot with the negative value change, with the negative investment change, you have an option to wait for the investment change to be like to close at the 0%. So that's going to be a zero return. But for that, you must wait for the break-even price, because only when the price moves upwards to the break-even price. So for ERD right now, you see the price is, yeah, let's switch to ERD to see the chart. The price is now 0.02, and if I click on close and I will select the break-even, so the break-even in this case is 0.024. So on a chart, as soon as the price once again, so from that current price, so that from that point the price must move up to 0.24. so that's, you see, exactly corresponds to 15% of the growth. So you must wait for the price to grow by 15% so that you will exit the market having only a 0% of the investment change. All right, so it always readjusts accordingly based on the current amount of the base currency that you have in open orders. So it turns out that having this amount of base currency currently allocated to all of the sell limit orders, the break-even price is 0.024, whereas if you would have another number here, it would be that the break-even price differs. So these are the options how you can exit from the market. So you can find it here, up to 3 options when you click on close. The fourth one is the stop loss, and the fifth one is the take profit. So these are 5 instruments for you to exit the market. Yeah, another thing that I forgot to mention is that all of the fees that you pay each time you execute a buy limit order or a sell limit order, you know that the cryptocurrency exchanges, they charge fees to execute these limit trades, and all of these fees, they are already priced in, so we take them into calculation. So the profit that you see here is fully net of all fees. All right, so the marginal profit is the difference between the price you purchased the base currency, so here is 0.142818, the price at which you sell it at higher price, so that's the marginal profit when you did automatically deduct the fee, and here comes your net profit. So not every platform can offer such a transparent calculation, whereas at Bitsgap we have this absolutely transparent calculation. So the bot profit that you see here is your pure profit, so that's what goes to your pocket for sure. And notice that I have some open active bots on my real account as well. And when it comes to deciding at which point of time and price to initiate the bot, it all depends on the technical analysis skills that you have and the fundamental analysis. So from my experience, I stick to support and resistance level because I've noticed that the majority of top 20 cryptocurrencies, like most liquid cryptocurrencies, they respect support line. So if I draw the line, so that's what BNB trading to USDT, notice that it does respect the support level. So each time it approaches support, it bounces off. You see, again, bounce off, bounce off. So taking this statistical data, you can find those optimal points at which you can initiate the bot. So I usually enter the market when I see the price not only approaching the support level, but eventually bouncing off it. So let's say if we would be at that point of time over here, I wouldn't enter at that point because it only approached the support level, but I would enter as soon as it bounces off. And somewhere at that price, I would have entered the bot. Let me show you example with Ethereum trading to USDT, and I will show you the price exactly at which I've entered the bot. So I've noticed that the volume was spiking and the accumulation was happening over here, and most importantly, fundamentally, there were more reasons for the price to go upwards, so that's why I've entered this trade, and you see now in the profit zone of 12% in total. All right, and maybe another example, the one that I've closed was BNB trading again to USDT, and I've launched it back at the 4th of August. No, actually, for some reason it's a mistake. Actually, I've launched it somewhere at the beginning of July, I think, or June, I don't remember. Yeah, somewhere at that time. So during the period of 40 days, yeah, I've managed to make 14%. So to my 500 allocation, that's 14% of the return. So that's around 70 USDT for 1 month. So that's quite a decent return for that period of time, especially that I didn't spend time on manual trading, I didn't spend time on manual execution, so I fully let the bot to execute trades on my behalf, and that's how you can, guys, maximize your and automate your trading using high frequency algorithms that we have here at Bitsgap. Now let's see what questions you have, and I will try to answer on the most interesting. Yeah, so let's go back to my demo mode where I have some bots without the trading up feature on, because I see some questions regarding the trading up and what is the optimal time to switch on the trading up feature. You see, in most cases, when based on the technical analysis and fundamental analysis, I can see that there are odds in favor of the bullish trend, then I will switch on the trading up feature at configuration, so at the initial configuration. Whereas here I have some bots without the trading up feature on, which I can switch on later in any case. So that can be a choice for you, that at the initial configuration you don't switch the trading up, but you later switch it on as soon as you see that the price will most likely breach the upper limit price, so it will go higher, it will breach your trading range. So what you can do is, by clicking on view, you can switch on the trading up later anytime, and by that you enable the bot to follow the rising market. However, it can be the case that you don't have the internet connection, maybe you are in the plane, or I mean you don't have the access to your trading algorithm. So when you have initially switched on the trading up feature on, that's by 100% that the market, the algorithm will follow the rising market. All right, so when you so the answer is, it's up to you how many hours you spend on trading. So if you want to spend less and you want to minimize the time spent on trading, then of course having trading up feature on initially and having stop loss, and you can also switch on the take profit, ensures full automation. All right, so you've set your goal is 10%, your stop loss is let's say somewhere over here. You have a trading up feature on, which ensures that the trading range will follow the market. So that's what I call full automation, and by that you will spend less time on monitoring the market, on checking out how the algorithm is doing there. Whereas when you don't have these features on, it means that you prefer spending more time, you want to have more control over your strategies. It can be that you are not yet confident in your selected configuration, so you'd rather decide on whether or not to switch on trading up feature on later, as well as the stop loss, as well as the take profit. So it depends on your trading style, it depends on your experience, and how you are confident in the configuration that you've selected. And the magical power of demo trading is that you have this absolutely risk-free trading simulator to test as many and experiment with as many algorithms as you want before risking any real money. So you see, even though I have my real account here connected to Bitsgap, I still have some demo active bots because I keep experimenting. You see, somewhere I have only 50 grid levels, in some cases I have 180, so I'm constantly looking for those configurations that provide me with optimal return. All right, and that's what makes it interesting, and that's why automation is so cool, because you can experiment with it and you can optimize it in any way you want, and you will eventually develop your own optimal beneficial trading strategy. And that is why we have this webcast for you guys to learn based on my cases, based on my experience, and you have this demo mode to experiment as many times as you want. All right, so that's absolutely risk-free, and regardless of your subscription, you can experiment with strategies. So yeah, that's all for today. Thanks for your time. I really appreciate that. Thanks for your feedback, thanks for your questions, and if you have some questions left, then use the Telegram chat that we have at Bitscape. You can also use the support button, and here you can ask any question you want, and during the next webcast you will be able to also ask your question, and we will provide you with the meaningful answer. And yeah, once again, a quick reminder, OKEX competition, join, together we can beat the market. So thanks again, and I wish you profitable trading, I wish you meaningful education, use demo mode, experiment, watch previous webcasts, watch the series of videos that we have on YouTube, to make sure that you develop your skills and sharpen your knowledge. See you next week. Bye.